Hey everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That is spelled DRSTOXX.com. And if you go to our website, you want to join me and a whole bunch of amazing people in a trading room in Discord where you will get not only great trading talk throughout the day, but you'll get everything I'm trading. You'll get my entry price, stop price, target price, reasons for the trade, technical chart. You can ask me questions throughout the day. I give you my market observations throughout the day. And we've got a bunch of people in there that are sharing their market observations, and it's just a great place to hang out. If you want to do that, go to the subscribe menu, scroll down to the live trading room. That's where this is coming from today. And if you want to add on our options room, where we only do options, and we're pretty much only doing long calls and puts. We do a few spreads now and then, but mostly long calls and puts. You can add that on for a 40% discount. Both rooms are hitting all-time highs this week, and that's good to see because the market's been a bit, over the last couple of weeks, it's been kind of up and down, up and down. All right, let's take a look at some charts. So I've got three things I'm going to do with you today. We'll take a quick look here at the indexes. Then I'm going to take a look at an indicator. You'll see it at the bottom of this chart. I'm going to talk a little bit about how to read that indicator, what I know about it, because I'm not an expert. It's called the cycles indicator, and I'll explain a little bit how I'm using it. At least I'm trying to learn what it's about. And then we'll go over to my grains list and look at several stocks that are setting up quite nicely, some of which we're already in, some of which we may be getting in by the time the bell rings this afternoon. All right, so quick look at the S&P 500. This is the MES, the micro E-mini for the S&P 500, and you can see there's the big flash crash, really long, scary red stick that knocked a lot of people out of the market, knocked us out of most of our longs because of stops being hit. Got down even below the 50-period moving average, and then it bounced back up into the close, and that was the signal that we would likely get a gap up inside day bar the next day, and we did exactly that. So we had Monday, nice looking bullish bar, and then it was just a chop fest with wide extended ranges up and down for the rest of the week. It was a negative week overall for the market. It was kind of a flat week overall for us, but then we made it all back this week nicely by getting on board some good trending. We also had a few nice days last week as well. In fact, one of our best days for the year came last week. In fact, it was that bar right there. Yeah, it was that Monday, the big gap up, because we bought a bunch of stuff down here right as the market was trying to climb back up again. We got long a few things. We got along a few more things at the open of the next day, and everything just did really well. All right, so here's the thing. So we're up near all-time highs. We're coiling up quite nicely above the 21-period moving average. Everything is still in a good, strong uptrend. That's not a worry at all. Typically, in an uptrend like this, even though it's been a bit extended, April 7th was the low. Here we are in late October. So a little bit long in the tooth, and we haven't had much in the way of a major pullback, nothing more than 4 or 5%, maybe at the most. And that's a bit atypical for a good, healthy bull run, but there are all kinds of good reasons still for the market to continue higher. And if those reasons change, we'll look at a very different kind of pullback, more extended. But if those reasons don't change, there's no reason for the market to do anything like a major sell-off. These little days where we get a headline, it was a Trump tweet about China that knocked us all the way down. But those are great buying opportunities. Don't think of them as, oh, the market's coming to an end. Oh, I better jump out, go to cash, buy gold or whatever. Don't think in those terms until we get major changes in the macro environment. And we're not there. We don't see them. In fact, the things on the horizon, like more rate cuts coming from the Fed, a China trade deal on the near-term horizon, earnings that we've had so far are pretty good, right? I mean, not great. We've had a couple of big misses, but overall pretty good. And then the whole new tech world opening up with AI, quantum, super cloud, data centers, and all the infrastructure that's needed to get those guys going, just creating all kinds of amazing growth opportunities. We have to be a little careful. There are some grenades out there dug, dug into the ditches. But that's why we're in this trading room, because people are paying me a little bit of money each month to do that kind of research for them. And am I perfect? No. But are we finding some really good sweet spots in the market? Yes, absolutely yes. All right. So generally speaking, bullish, bullish, bullish until further notice. The same is true for the NASDAQ 100. It's been a little bit flatter, right? The big drop down, not quite as scary as the S&P 500, and that's because these are growth stocks, not necessarily a broader. You know, in the Nasdaq, you have the big major tech stocks, and the biggest companies on the planet form about 25%, 30% of that index. Whereas in the S&P 500, much more broadly based, 500 stocks versus 100, you have more diversification. And so the big tech stocks at the top, which stayed pretty stable, didn't carry as much weight. Anyway, so there's the NASDAQ 100, same chart as the S&P, same bullish read as the S&P. No difference there. The small cap index, actually, I said this yesterday in the live options room, that I like what the small cap index is doing right here. I've been kind of out of the small caps for a while. Let me get rid of that divergence indicator. It's a good one, but we don't really need it right now. So I've been kind of, I haven't said small caps are a no-go zone. I just haven't traded it for a while. We get quite a bit of choppy action in here, and then it hasn't been as strong as the other indexes. And now it's doing this actually quite bullish consolidation move. I think it's probably going to get into a little closer to the apex before it actually gives us a breakout. So maybe a little bit of back and fill tomorrow, and then a Monday, Tuesday, probably the day to get on board something like TNA or TNA calls. So we have a little bit of Bitcoin in both rooms, or just I think just the live trading room. We're long the futures, micro e-mini futures, and some of our members are long the we do have it in both rooms. Now I think about it, we're long the micro e-mini futures in the live trading room. We're long exchange traded fund, leveraged exchange traded fund for Bitcoin calls on that. And I really like what's going on today. So it was a gap down early off the bell. And in fact, overnight, the futures were a little bit weak on these crypto plays, but it's been a trend up day all along. We're printing a good bullish engulfing candle, erasing yesterday's gains altogether, and printing, if you look at a 2-hour chart, for example, you're going to see a higher low printing relative to a few days ago. That's good. That's bullish. We are in a slight uptrend. We're down here in the pink zone of the uptrending LRC. That's 2.0 standard deviation away from the mean, and that's usually a pretty good place to be a buyer. Ether, pretty much the same thing. It's been a little bit less reluctant to get back up and erase yesterday's highs, but it's getting there. And I have to say that I'm not even sure if I have that support line where it should be. It might be that this is, in fact, not a rising channel, but a falling wedge. And if that's the case, and this is why I'm not exclusively a pattern trader, because patterns can be a bit on the subjective side, but if that's the pattern, then that is a lot more bullish than the one we were looking at before with a broken support. And all we need to do is keep above the lows, the recent lows, start to bang on that RTL, the resistance trend line, and then sooner or later, it will have a good move. I don't think either Bitcoin or Ether is the best trade to put on today. I got in a little bit early, but we did do some smaller positions, and we can always add if we need to. But I think next week, probably middle of the week, is the time to really watch these crypto plays get going. I'm still in some silver, and it is a nice looking pullback to the 21 period moving average, but I've been in this one for a little while. So I got in down here, sold it up here, got back in a couple of days later, saw it go all the way up here, and now pull back, and I'm still in it. So I saw a lot of my profits get erased, but that's what happens. Gold is going to be a good trade soon. I do think that, as I said just a little bit ago, that this is kind of a dead cat bounce. We'll probably see another leg lower. We can get a better entry in a few days. And silver is a hold. I'm not so sure I'd get on board just yet. Huge run up in oil today on some geopolitical problems. And we're seeing also good bounce in copper and a double top forming here in natural gas, which I'm sad to say because we're long a bit of oil. So I bought some oil down here, so it's still profitable. Got us into the room up here, so we're not so profitable. We're just a little bit below our entry, but we've been raising our stop. We'll see if that still holds up. Natural gas is always not such an easy thing to trade. You know, you get a lot of this choppy, big red bars up, big red bars down, big green bars up. But lately, it's been trending quite nicely off of the lows, right? Here's a higher low, here's a higher low, higher pivot high, higher pivot high. So it's been looking better, but we still need to allow this double top here to play out. Okay, now let me go over to my greens list, and I will show you what I'm looking at with this cycle indicator down here. So I've been talking in the room. Let me get something on like how about Pony? Yeah, Pony's a good one to use as illustration. So I've been talking in the room about five indicators that I like to see line up for a new pullback trade. So basically, there are three types of trade setups. So there's the pullback, right? Uptrend, uptrend, uptrend. Let me get my drawing tool on here, right? Uptrend, uptrend, uptrend. And then you want to buy the pullback here at a place of support. Indicators are lining up. The indicators are showing that's maybe in an oversold condition. You buy down at support on the pullback in an uptrend and in anticipation of a new leg higher. That's the pullback setup. A consolidation setup is where you get the uptrend, and then you get a tight consolidation, right? Maybe it could be a rectangle, could be a triangle, a pennant, a bull flag. Those are all forms of consolidation. And I like to buy, some buy on the top of that consolidation, so a confirmed breakout. I like to buy within the consolidation, and I use different tools to tell me when to do that because it takes a lot of the risk out, right? You can keep a tighter stop and you get more upside that way. And then the last one is a simple breakout. So instead of buying the pullback here, you would buy the breakout above the most recent pivot high there. So those are the three forms of setups. Let me get rid of all this. And we're only looking here at the pullback, right? So we're looking for an uptrend. That's rule number one. The sign number one that we're looking for is an uptrend. You can look at that. You can determine that in several ways. I simply like to look at the linear regression channel, which are these bands back here, the blue, the salmon, the pink, the light blue. If those lines are trending higher, it's an uptrend. This is a 100-period look-back period, so it's about 3 months of trading. No, five months of trading, right? 20 trading days per month. If that's rising higher, then we are in an uptrend. The other way you can look at it is look at the moving averages. I have the 21 EMA, the 50, and the 200. If the 21's above the 50, it's in a short-term uptrend. If the 50's above the 200, it's a longer-term uptrend. And if they're stacked in that way, 21, 50, 200, you've got a really nice-looking sustainable uptrend. That's the case here for Pony. So number one, uptrend. Number two, I like to go down to the cycles. This is the cycle indicator down here. We've got, I removed the two short-term cycles just to clean it up a little bit. They're not that important anyway. And what I've gone hit on here is the black long-term cycle, the orange midterm cycle, and then a couple of shorter term cycles, the blue and the purple. So cycles are, they follow in line with a number of approaches to the market that rely on mathematical patterns that tend to repeat over time in a price markets, right? In anything that's being charted, right? A price chart. And now, let me back up a little bit here and tell you this. Everybody thinks that Warren Buffett is the greatest investor of all time. And there's a good argument to make for that. He's certainly hugely successful. But if you look at pure track record over, let's say, a 20-year period, there's one guy that stands out even well above Warren Buffett. The greatest fund manager of all time is not Peter Lynch. It's a guy that maybe you haven't even heard of. His name is Simons. Jeff Simons, I think is his name. And he's a mathematician. He was a PhD in mathematics, and he decided that the best, most probable way of profiting from the market was not to look at the moat, which is what Warren Buffett likes, not to look at valuations, what Benjamin Graham likes, not to look at EPS growth rates or sales growth rates. That's Peter Lynch's thing. No, you look at the price chart alone, and you determine mathematical patterns that keep repeating in that same price chart, and then you forward project them to determine the most probable path of the stock going forward. That's exactly what he did. When he was trading his fund, he didn't have Wharton graduates with MBAs. He didn't hire finance guys, he didn't hire stock analysts. He hired mathematicians and physicists. Physicists, yes, exactly. So, and what did they do? They crunched numbers all day long, and they discovered, and you won't know what they discovered because it's been kept a secret for a long time, probably won't ever be revealed, but they discovered certain mathematical formula. You could take price charts over time, plug those numbers in to the formula, and it would give you a probable path going forward. Now, that's the most profitable approach to the market, the mathematical approach based purely on price. And if you're a technical trader, you know exactly what I'm talking about, because that's pretty much what we do. I also include fundamental data. I include analyst reports. I include balance sheet in most of what we trade, not always, but most. But I'm just trying to cover all my bases. And I don't have the quant power that Simons had. So I need to develop a few more tools. But the cycles indicator functions in that same way. It assumes that when price moves up and down, right, as it always does, it does so in regular repeatable cycles. There are short-term, medium-term, and long-term cycles. The distance between the frequency of the waves does not change for the long-term, medium-term, short-term cycles. However, the amplitude does change. So they are dynamic. The cycle indicator here is dynamic to price itself. When you get big price swings up and down, you're going to get big waves. And when you get tight little, moves up and down that don't go very far, the waves get really tight. So when you're looking at the cycles indicator, and this is about as much as I know, the most important thing is you want to see the big black line here down close to the bottom. You don't want it to be up at the top, because that's usually when the trend peters out and you get a down cycle. You don't want it falling, because even if the short-term cycles and medium-term cycles are rising higher, they're going to get stuck under resistance. That typically is what happens. But when the big black line is all the way down to the bottom, and especially if it hits the bottom and starts rising back up again, that's usually, not always, usually a very good place to get on board for a pullback setup. Now, even better is when the black line coincides with some of these medium-term cycles. They also have fallen down to the bottom, and they're also starting to rise up. And when you see that, it doesn't happen very often. When you see that, that is probably the best of all signals from the cycles indicator. All right, so that's number 2. Cycles indicator, big black line down there at the bottom. Even better if it's starting to tail higher, and even better still, the medium-term cycles are themselves. They have bottomed out, and they're starting to rise higher. Okay, third thing I look at is the volume. I like to see a volume balance where we've got more greens than reds. We've got taller greens than reds. And because we're in a pullback, these are all pullback setups here. Because we're in a pullback, we're going to get a whole bunch of reds, right? Because that goes with being in the pullback. But we want to see light volume, right? Well below average volume on the pullback. We want to see above average volume on the rise higher, but below average on the pullback. Okay, check. Now, the third thing we want to look at is that the price has come down a significant way from the most recent top and is at a level of support. What can that be? It can be the midline of the LRC. It can be the 21 EMA. It can be the 50 period moving EMA. It can be the pink zone of the uptrending LRC. That's usually about as far as we'll get. The other thing we can do to determine support is throw on a Fibonacci ratio. You look for the most recent pivot low, you pull it up to the most recent pivot high, and then you've got the 38, the 50, the 61.8, and then this little band down here that is called the professional money band, which is down near 78%. If you get all the way down there, that's pretty rare. That's a long pullback, extended pullback, and that's typically a place where it's just about as far as the stock is going to go down, as long as it's still uptrending. That's just about as far as it's going to go. But this zone between the 50 and the 61.8, it's called the money zone. Because very often, big funds that want to be invested in a stock like this will set their buy programs to trigger at that line. And so 61.8, that's at a price of 1772, and you can see that hit yesterday. 1772 got a little bit further down and rallied back up, and it tagged it again today and bounced back up quite nicely. So all of that is to say that Pony looks pretty good from all that perspective. We've got the cycle, the big cycle down here at the bottom. At least the blue intermediate cycle is rising. We've got the volume balance the way we like it. We're down here at support of the 50 and Fibonacci retracement. And, it would be nice if the MACD could also be below the zero line, and that's exactly where it is. The green signal line here is below zero, which means it's oversold. And we don't quite see the MACD pinching a little bit yet. That will probably come with a couple of more upside days, but it's not flashing itself a buy signal, but it is in the right place, down below the zero line. Oh, and the last qualification for me was that MACD, by the way, is just kind of an icing on the cake. It's not a requirement, but the last requirement is that earnings has to be at least a week away. Most of our trades are 2 to 3 days in length on average, maybe a little bit longer now because I'm trying to hold our winners a little bit longer, and we're in a very good market for that. So earnings have to be at least a week away to give us enough time to get some profit potential and allow the trade to mature a little bit. So a couple of weeks, 3 months, 3 weeks, even better. So NVIDIA, let's take a look at NVIDIA with all that in mind. We've got the black cycle down pretty low. The MACD is not showing us a buy signal just yet, but it is starting to pinch a little bit. That's good. Now, I don't like NVIDIA yet for volume balance because here's your pullback, right? Here's your new all-time high. Here's your pullback over a couple of weeks down to the 50. That's your support. That's good. But most recent volume balance is a little bit leaning too bearish, right? We've got more distribution than accumulation. And so for me, it's not ready yet for a go, but that's the one thing we'll be looking for, right? We want to see some big upside volume like these 3 bars right here, these 3 days right here. Okay. So we bought some Tesla today. This had nothing to do with the setup. It was just a big buying opportunity down here. It was, stock had 420 is such a key level for Tesla. And it opened there and it went down a little bit to flush out a bunch of stops, and then it rallied back up, and it's been rallying all day. So we got in at pretty nice, pretty early today, and it's back up to some really nice highs. But just on the basis that I was talking about, the black line is where you want it. The intermediate cycles are rising. The MACD is not showing oversold, but it is starting to pinch, closing pinch, which is the buy signal. And if we go back to volume balance, yeah, it's leaning a little bit more on the bullish side, right? More greens than reds, taller greens than reds. So this FUTU I like. I actually have some shares of the leveraged ETF for this one, FUTG, which I bought during my lunch break today. And because here's a good example of the black cycle, long-term cycle, bottomed out and is rolling higher. Here's 2 of the 3 other medium-term cycles are rising as well. We've got the fresh MACD buy signal below the zero line. That's perfect. Volume balance is a little bit mixed going back, but if we look at most recent volume, it's leaning more bullish. And we're coming out of the pink zone of the uptrending LRC. That's your support line, and earnings are a ways away. All right. We're in JOBY in the live trading room. It's a little bit above our entry. It's an inside day bar today at the 50 period moving average. The long-term cycle is down. The orange midterm cycle is bottoming out. The blue midterm cycle is starting to rise off the bottom. That's perfect. Volume balance, look at all that accumulation going on right there. Yeah, a couple of days of distribution. So it's not perfect on that regard, but it is falling down below, well below average, and earnings are a couple of weeks away. We'll see where that one goes. Let me find a couple of others. I really like BIDU, although I'm not in it just yet. I kind of want to see if this is going to continue lower and tag the 50, or is this already, was yesterday the bottom of the pullback? But look at these cycles, right? Just perfect. All the way down to the bottom for the black, bottoming out for the orange. The two midterms are rising. You've got the signal line below the zero line, and you've got some pinch going on with the lighter histogram colors. All the volume on this pullback, with exception of those couple big days, have been below average. And you've got reversal off the 50 SMA as your support, with earnings of ways out there. Okay, let's look at a few more that are doing a bit better today. So we're long PGY in the other trading room. It's a nice looking, but notice all of these are pullbacks, right? This whole list, these are all pullbacks. So I'm not looking at breakouts. I'm not looking at consolidations. I just kind of wanted to flesh out this system and work a little bit more on what I'm looking for. But this is a rounded bottom pull at the end of a pullback, are more bullish than a V bottom. Earnings are a little ways away. Volume has been dropping off. Fresh MACD buy signal. With the exception of the purple there, all the cycles are rising, especially the big granddaddy of them all, the black one, starting to rise off the bottom. Okay, what else? So we bought some open in the live trading room this morning. 3-bar reversal at the 50 period moving average. Nice, sharp uptrending LRC. Volume has been tapering off on the pullback. You want to see that, right? You don't want to see people jumping ship in heavy volume on the way down. You want to see light volume on the way down. Heavy volume on the way up, light volume on the way down as a general rule. MACD is pinching below the zero. The long-term cycle exactly where you want it. The purple one is nicely curling higher. The orange one is rolling higher already. Earnings are still a little ways away. So we're in this one open. Let me think. I am interested in Hood. It's doing a nice, very nice reversal bar today. Almost a bullish engulfing, not quite. Back up above the 21 period moving average. It's off of the 50 from yesterday, which tagged and held and bounced. And out of the pink zone, uptrending LRC, everything in the price looks good. In fact, really good. The volume on the downside has a couple of heavy days, but otherwise light. And MACD is not below the zero line, but it is starting to pinch. And the cycles aren't quite where I would want them. So it's possible that, because they're still falling, right? It's possible that we get another little bit of a leg down. That's probably going to keep me out of the trade. And then we've got earnings not too far away. So one to keep an eye on. Here's one we did buy today, an NBIS. This is not exactly the kind of pullback I like. It's quite sharp. It's a cascading waterfall down. And I just jumped on board this one maybe a little too early because the big black cycle is still falling. And but the other two of the midterms are down at the bottom. The purple one is starting to rise higher. Volume is a little heavy on the downside, but I'm in a long-term position with this one. I think it's a investment grade kind of position that you can hang on to for a while. And when I saw that reversal this morning, we bought in just after the bell, right there at the open, right around 100, and here it is at 106, high of the day. So it's working out so far. We'll just keep rising our stop until the market takes us out. But I do like it's not a perfect setup based on the five parameters I just shared, but hey, I know the stock. I like the pullback. I like my chances. Lastly, I'll look at Solana or Sultana. Solana, right? So this is the 2x bullish version for the cryptocurrency Solana. I called it Solarium the other day, but it's not that. So it's the only other crypto I've traded beyond Ether and Bitcoin. Bitcoin and Ether, I'm comfortable with. I'm a little less comfortable with this one. We did try it the other day. We had a nice bullish engulfing candle right there on very good volume. It looked great, and then we got stopped out pretty much off the open yesterday in the live trading room. It's bouncing back quite nicely today. It's up quite a bit, right? 12.5%. This is a big mover because it's not only a cryptocurrency, but it's 2x. And it's potential that we have a double bottom forming here. And okay, volume balance is a little bit all over the map, but I like the long-term cycle at the bottom. The midterm is pointing higher after the bottoming out. The orange line is already moving higher, and we're starting to get a pinch in the MACD, and we do have some good days of accumulation down here off the bottom. We're also below 2.0 standard deviation. And typically, the market doesn't last very long down there without bouncing back up to test the mean. The mean is way up here, 26. So yeah, I like the chances on this one. It's one that I have some unofficial experimental shares in, but we'll see that, well, actually calls over in the other room. We'll see where that one goes. All right, guys, I will let you go here because I need to get back into the room with as much time as possible. I'm sorry I can't take trade chart requests, but if you have a ticker symbol you're really interested in my analysis on, you can type the ticker symbol in and be sure to type my name next to it, Dr. Stoxx, so I can see it. God bless everybody. Have a great rest of the afternoon. We'll see you back in the live trading room in just a little bit. Bye for now.